Hey guys, it's Regina, the queen of car loans. Been in the automobile business for 23 years. Yes, you have stopped by my YouTube channel, and I love doing my videos in the car because it's when I think the best in my car. If you just stop by my channel, hit the subscribe button so you can stay up to date to my videos and to everything that I have going on. Today's video, we're going to talk about reasons why you have to put down payment at a dealership. And this is honestly toward customers that have bad credit. I like to say bruised credit, but that have bad credit. I am Regina, the queen of car loans. 80% of my customers have bruised credit. I walk them through the process of getting into an automobile. A lot of times when you have bad credit, again, I like to call it bruised credit, you are told that you have to put so much money down, or we suggest that you put 10% down, in some cases 15% down of the sales price. Because it's all about down payment when you have bruised credit. In some cases, yes, you can get into a vehicle with no money down or zero down if you have bad credit, again, bruised credit. But I just want to go over some reasons why, maybe 2 or 3 reasons why you're going to need down payment money to get in that particular vehicle because of your credit score. Number 1 is if you have bad credit, the lender, the one that's going to buy you for that particular vehicle, they're charging a dealership a bank fee. That is the price of doing business. That fee can be anywhere from $95 all the way to $2,000. Yes, it can be that high. Some cases, I've seen banks that have charged $2,995 or $3,995 in fees to do that loan. So when a bank or a lender charges that much money in fees to do that loan, that's because they really don't want to buy you. You're high risk. You're high risk. They want to charge the dealership so much money because they're thinking more than likely you're going to default on that loan and you're not going to make your payments. When the dealership is charged that bank fee, that fee is in all actuality passed on to you with your down payment money. You can't compare your credit to someone else's because a lot of people do that, and that is a no-no, and your down payment is more than the next person. But anyway, it's the price of doing business when it comes to the bank fee. We call it subprime lending. They have a bank fee that the dealership has to pay in order to get you into that vehicle. You might have to put $2,000 down. Dealership may say, you know what, you need to put $2,595 down. $2,595. But in all actuality, the dealership is not going to tell you that you are paying the bank fee. But you are, because we need to cover it as far as the cost. So we're not going to tell you, no dealership is going to tell you, okay, you know what, you're paying the bank fee. No, we're just going to tell you you need more down payment money. That's one reason why you're going to put down payment down, because of your credit, and then you got that bank fee that's there. Unless the dealership has room to actually have the bank fee come out of the gross. But the bank fee does come out the gross of the dealership's profit, and all actuality is passed on to you. You just don't know that. So I just gave away a huge nugget when it comes to down payment money. And honestly, it's really nothing that you can do, because this is the price of doing business. We're going to up your down payment money because we have to absorb the bank fee. Because in all actuality, we can't say, okay, you're going to pay this extra $1,000, extra $500 because of the bank fee, because you're not going to see that on your paperwork. So, but yes, we do have a bank fee. The second way that you're going to be putting money down on a vehicle is that maybe you're getting a vehicle that you cannot afford. You are purchasing a vehicle you cannot afford. You need to go in and get that Malibu, but you're trying to get that Traverse. Now, I know I went to a car, to a crossover, but you going in, you need to get that Malibu, and you want that Traverse. And it's a way difference in price. Chevy Malibus, brand new, are $26,000, $27,000. And a Traverse starts at $34,000. So what happens is you're gonna make the difference up of that down payment money, because you're getting a car you cannot afford. So think about that. If you have problems with your credit, then get a vehicle that you can afford until you get your credit together. Another way that you're going to pay more down payment is negative equity. If you owe more on your car than what it's worth, you might have to make up the difference of what the dealership is giving you for your vehicle than what you owe. So those are 3 ways that you might have to come up with down payment money. And the negative equity goes to anybody, whether you have good credit, bad credit or not. You might have to make up the difference. That's why what I do is If you have negative equity, I try to get you into a new car, because my philosophy is you put negative equity onto a new car versus a used car. If the negative equity is less than 1,000 or less than 2,000, in some cases you're able to put that onto another vehicle. So I hope you enjoyed this video, and don't forget to hit the subscribe button. All right, see you in the next video.